That's right, folks. You know I had to talk about Plug Power too. This is a stock, obviously, I've been following for a while, if you might know. So let's talk about this one. It dropped 4% in the after hours trading after an earnings report. We're going to take a peek at what this report looked like. Look at previous performance of the stock year to date, up 25 or 26%, but was up a lot higher earlier in the year. Or you're talking about their high points in the 60s earlier in the year. They're still down 37% since then. And obviously still great performance when you're looking at 2020 onward. The stock's still up over 1,000%. This stock used to be in the $2 range. That's when I picked it up previously. Sold it out for a good profit, and I'm back in. I'm back in the stock right around $27. So we're already up since then too. I sold some more the other day too, in case you were curious, right before this earnings, which turned out to be actually a pretty good pickup for me. So we'll take that. Another few $100 gained. I love to see it, baby. So let's look at these earnings and see what we got going on. So as you might expect, there's a reason why the stock's down. GAAP EPS line of negative 19 misses by 10 cents. And again, I know the company's growing, but I would really like to see this number improve, and that's kind of why it was not one that I just held on to. Again, I think this is a great long-term hold of a stock, but this is a line that I don't personally feel comfortable about in the short term. I'd like to see that number improve, and I think they have a great opportunity to. It's really an innovator in their business and a new emerging market. I think they'd be great. I'm getting a little ahead of myself, but that's okay. The revenue line came in at $143 million, which is up 34.5% year over year. Did miss by $0.92 million. Not a massive miss, all things considered, but it is a miss. You have to keep that into consideration. In my opinion, this is still a fantastic number, though, for them, because you talk about the way they've grown revenue over the last couple of years. It's been really an exponential line here. This is a company that originally thought that they were going to hit $1 billion by 2024. That was their original plan. And now you can look at the guidance for 2022 is already at $900 to $925 million. They're going to hit their goal of $1 billion in 2023. They're going to hit it a year earlier than they expected. And that's a fantastic number for them. I mean, that's wonderful. If next year they're able to hit this $900 million number, that's a fantastic guidance line. It's kind of crazy. On these fast growth stocks, typically if they raise guidance, that alone can solve a bad quarter. Or if they lower guidance, that alone can destroy a really good quarter. So keep that into consideration. So let's look at the press release, see if some of the finer details. Oops, I think I already had the thing open, but we're opening up another one apparently. That's how we do here. We got to look at the shareholder letter for Plug. Ugh. You know what happens when you don't look at the shareholder letter? This is what happens. You gotta look at the shareholder letter with some of these companies. They don't play around with press releases. They say, read the shareholder letter, you scumbags. We just typed it up. So let's have some great stuff. Let's talk about it. Plug Power Symposium, we all know about that. 5,000 attendees and dozens of global speakers. They established now guidance in 2025 of $3 billion in annual revenue. So the number keeps continuing to grow for them. This was $1 billion prior, and they've tripled that number. It's crazy to see. So they plan to build 30 tons a day hydrogen plant in Fresno. Obviously not where I would personally, if I were starting a company, build anywhere near California. Would not want that to be a thing. So just being clear with you, which would be the largest facility of its kind on the West Coast. That'd be pretty crazy if they're able to do that. Obviously, not many hydrogen plants necessarily out there. This is one of the few hydrogen companies out there. One of the big ones, I should say. State-of-art green hydrogen production facility under development in Georgia, New York, and other locations to meet the goal of supplying 500 tons per day of liquid green hydrogen by 2025, which would put them over that $3 billion line. So obviously this is something that's going to happen. I'm not saying it's guaranteed going to happen for the company. I think that's rude to say. But the clean hydrogen industry is obviously going to take off. I think that goes without saying. It's an emerging market, and as we talk about alternative fuel sources, green hydrogen is obviously, it's a fantastic avenue in that aspect, and I think that there will be a lot more funding in it into the future, and obviously this is a industry that's growing as you can see from the numbers that Plug Power has been able to put up. So really good stuff. Really good stuff. EU headquarters obviously launching in Germany. Pretty nice to see for them. You'd like to see it. So as part of a joint venture with the Renault Group, they're targeting 30% of the market share in hydrogen-powered light consumer vehicles by 2030, which would be pretty crazy if they're able to do that. I mean, that's fantastic stuff. So recap of the third quarter, worth mentioning some good stuff here. They shipped 4,559 GenDrive units. Obviously, you talk about platform revenue, pretty important for them as far as products concerned, with 16 infrastructure systems compared to, when you look at the year prior, 3,700 units and 13 hydrogen systems. So obviously, you can see how quickly they're kind of scaling that in terms of growth there. Really good to see compared to net revenue of $107 million. So I mean, it's just fantastic growth. I mean, we're talking about growing $40 billion or $40 million in sales. It's really good year-over-year growth. I mean, it really is for this company. Yeah, I mean, it's fantastic. And again, you saw the great numbers expected in 2022. So supposedly, as you see here, part of the guidance too, which is expected, because this impacts the profit line, they're expecting a decrease in the average molecule cost in quarter one versus Q4 2021 of 5% and continued decline through Q4 22, with hydrogen costs being over 20% lower than Q4 2021. So that one hurts. I mean, obviously, you take that into consideration. As hydrogen costs seems to sink, obviously it'll impact their bottom line. As we continue to grow the logistics capability, help them better manage the delivery of hydrogen at our customer sites, which will improve fuel efficiency, obviously worth mentioning. So you see fuel costs per unit expected to decline there. 50% reduction is what this shows. So that's some stuff there. That's some stuff. So what else? Service costs declining too. Look at this stuff. Look at this stuff. They're able to grow this revenue in great numbers. Obviously we saw about these numbers here with the different plants. The Georgia plant expected to produce 15 tons per day. The Western New York expected to initial production of 45 metric tons of green hydrogen daily. So they're working on these plants and seeing how they can grow. So pretty crazy to see. Obviously, that's a sign of a growing company as they are expanding in terms of production. That's a great sign. We're gonna scroll down overall because I wanna look at some of the numbers here. I want to look at the financials here. And you do see them with the balance sheet here, worth mentioning. So total current assets here, you compare them 9 months, $4.7 billion compared to $1.6 billion. So quite a growth here, and most of it's you see in the cash position. We also see available for sale securities. So again, raising capital in that aspect. So not something I necessarily like, all things considered. Total assets in general saw obviously the rise mostly just from the current asset line, 5.7 to 2.2. There's growth there. It's good to see. Total liabilities. This is a company obviously pretty good in the liability standpoint, and you can see it here. 269 in total current liabilities compared to 222, so very minimal growth there. And liabilities in general didn't grow nearly as much as they grew assets by $1 billion compared to $784 million. So we saw assets grow by, significant margins higher than that. So it's really good to see. Shareholder equity sitting at 4.7 compared to 1.4. It's a balance sheet I really like on this company, all things considered. And you know me, I'm a stickler for a balance sheet. Not really the balance sheet I'd expect out of a company like this. I wouldn't quite expect them to be there. But again, this company's been operating for quite a darn while. Founded in 1997, the year I was born. Great year, clearly. But the stock price has risen by so much. We're talking about a market cap of $23 billion on a company that has yet to revenue over $1 billion. I mean, we're talking about a company next year, even if you're based off those numbers, $900 million. So in that aspect, they're trading at a very high multiple. We're talking about a margin, really a price to sales here of over 25. Really over 30 as of this year. So the stock's valued very high. And again, that's why I bought at 27 when it was much more. It was just much better value at $27 a share. We're talking about a massive decline there in the market cap value. And I think this is a stock that has gotten a little bit big for its britches. And I understand the hype. I think this is a great hold long term. I think it's an okay buying opportunity at the under 40 range. I think it is, if you're planning on holding it for 5 years. If not, I can't tell you what it looks like. I think the alternative energy stocks are going to be in for a rough year, and they already have been. And I think that trend continues. I kind of, predicted it. Not that I'm going to say, I predict it all, but I did predict this one. So keep that in mind. I hope you had a great day, and have a good day tomorrow.